What if I told you there's a DeFi protocol that's pushed $1.4 trillion in volume, kicks back 100% of fees to holders, and might be the most slept-on play in crypto? Plot twist, it's bleeding price while building infrastructure that's got Binance looking over their shoulder. We're diving into dYdX. LFG! dYdX ain't your garden variety DEX. It's a perps trading beast since 2017. Founded by ex-Coinbase engineer Antonio Juliano, backed by the crypto Mount Rushmore, a 16Z paradigm, they pulled a power move, ditched Ethereum for their own chain. The play? Zero inflation and that juicy 100% fee share. First DEX to hit $1 trillion in lifetime volume. Read that again, Anon. Here's where it gets spicy. While most DeFi tokens are glorified voting tickets, dYdX is printing money. Every fee, 100%, flows to stakers. No dilution eating your lunch, just clean yield in USDC. $45 million in fees last year. Stakers banking 10 to 15% APR in cold, hard stables. That's real yield, not degen farming. Fixed supply at 1 billion, 80% already in the wild. The unlock drama? That ship has sailed. Tech-wise, dYdX v4 hits different. Custom Cosmos chain, 60 validators, not 4 nodes in someone's basement like Hyperliquid. They've squared the circle. Decentralized order book at warp speed without throwing security out the window. Pushing hundreds of mils daily. Sub-second finality, 200 plus pairs. The secret sauce? Permissionless listings. Community dropped 150 plus markets in 6 weeks. Megavault vacuumed $70 million TVL at 40% APR. This ain't white paper hopium, it's battle-tested kit. 2024 metrics? Absolutely bonkers. 270 billion volume, traders up 52%, TVL went parabolic from 100 million to 400 million. Daily volume clocking 200 to 250 million. Kraken's league on a DEX. Open interest 2 times to $325 million. The flywheel's gaining steam. Liquidity begets traders, begets more liquidity. But here's the alpha. DEX perps are capturing peanuts versus CeFi. The opportunity? Staring us right in the face. Let's keep it 100. GMX? Clean model, but thin on assets. Hyperliquid? Lightning fast, but centralized. 4 Tokyo nodes ain't decentralization, homie. dYdX took the high road. 60 validators while keeping the pedal to the metal. They're laser focused on being the trader's choice. Market share slid from 60% to 30%, but that's growing pains, not a death rattle. The moat? Battle scars, liquidity for days, and real decentralization. The 800-pound gorilla. dYdX ghosted US users from Jump Street. Smart money move. But here's the kicker. They're opening doors for Americans with spot trading by year's end. Swiss Foundation, fully decentralized V4, zero KYC globally. They've thread the needle like pros. They're sitting prettier than 99% of DeFi when the regulatory hammer drops. Reality check. Public team? Antonio's been building since 17, Coinbase alum. Investors? A-list VCs, a 16Z, paradigm, polychain. Code? Open as a book, audited 6 ways from Sunday. Clean sheet for 6 years. The only red flag? Validators. That's not a bug, it's a feature. Real wildcard is if crypto hibernates or competition eats their breakfast. Rug pull? Not a snowball's chance. Bottom line, is dYdX worth the bet? At these levels, it's highway robbery, trading pennies on the dollar versus GMX. PE screams the market's asleep at the wheel. Bull case? 5 to 10 times when DeFi perps hit their stride. Base case? Slow and steady as a yield-bearing blue chip. Bear case? Stuck in neutral if regs drop the hammer. Unlocks in the rear view, real yield pumping, tech moat locked. This ain't hopium, it's straight math. Not financial advice, but if you're long DeFi, dYdX is knocking. That's the dYdX deep dive. You buying this dip or watching from the sidelines? Sound off below? I'm all ears. If this moved the needle, smash that like, mash that hype button, hit subscribe for more straight shooting crypto takes, ring the bell, pass it on to your degen squad. Till next time, stay liquid, stay sharp. Peace out.